Hey everyone, welcome back to Capital Markets Quickie. I'm your host, Endrit Sella, here to give you the latest on the markets in just a few minutes. So, the stock market yesterday edged mostly higher as Wall Street got some encouraging news on consumer prices that could really shape what happens next with interest rates. The Standard & Poor's 500 was up about 0.4%. The Nasdaq Composite just barely finished above the flat line, and the Dow Jones Industrial Average gained 0.6%, or more than 200 points. What's driving this? Well, the Consumer Price Index, or CPI, showed that price increases held pretty steady in July. For the first time since 2021, headline inflation dipped below 3%, coming in at 2.9% year over year. On a core basis, which strips out the more volatile costs like food and energy, prices rose 3.2% over the year. These numbers pretty much matched what Wall Street was expecting. Now, this comes on the heels of some positive inflation data from Tuesday. The Producer Price Index, which measures wholesale inflation, rose just 2.2% year over year in July. That's almost right in line with the Federal Reserve's 2% target, which is a pretty big deal. Together, these inflation signals are making it look like the Fed might be getting closer to cutting rates. Even the more hawkish members of the Fed, who are usually more in favor of keeping rates high, are starting to signal they might support a rate cut if we keep seeing good data like this. If inflation continues to cool, and if the job market slows down a bit more, the Fed could be ready to cut rates as soon as its September meeting. Now, according to the CME FedWatch tool, traders are pretty much on the same page about a Fed cut next month. The big question is, how much? About 36% of bets are on a bigger, 50 basis point cut, while the rest are expecting a 25-point cut. That's it for today's rundown. Thanks for tuning in to Capital Markets Quickie. I'm Endrit Sella, and I'll be back tomorrow morning with more updates on the markets. Have a great day.